What's up, traders? 7-Star Mike here with 22 tips for trading success. I am going to break this up into smaller segments. This one is for tips number 1 through 5. Click that link in the description below for your free copy of all 22 tips. And let's stop wasting time. Let's get into tip number 1. Okay, so tip number 1 is to plan your trade. We always want a plan. Hitting the buy button and just hoping something happens doesn't work. Now, sure, you might generate a profit once or twice, but if you want a sustained career as a trader, that just doesn't work. You always want a plan for your trades. Now, this can mean different things. It might mean after hours or on the weekends, you have a scan and you run through some tickers looking for setups, and maybe you have an entry and an exit planned out ahead of time, and you're just watching the chart during the week to give you that setup. Or if you're trading momentum or scalping, maybe a headline comes out, you still need a plan. Now, with experience, you can do this in real time in split seconds, but you still have an idea of why you're getting into a trade, what support and resistance levels might be out there, and what's going to cause you to exit the trade. Even though that's a split-second process, it's still a plan for your trade. We never want to hit the buy button and just hope something happens. Trading without any kind of information as far as why you're in the trade, what might cause you to get out of it, is trading blind, and that just doesn't work. So tip number 1, plan your trade. I hope you're enjoying these tips so far, but don't forget to click that link in the description below for your free copy of all 22 tips. Okay, so now that we have a plan for our trade, tip number 2 is to trade the plan. There's nothing worse than seeing an entry on a chart, entering the trade, exiting early, only to watch the trade do exactly what you thought it would do. We don't want to do that. We spent time putting together a plan. Now we want to trade that plan. Now, a bad trade can still make money, and a good trade can still lose money. So what do I mean by that? If you had a plan to enter here and exit there, and you did exactly that and ended up losing money, that's still a good trade because you stuck to your plan. If you took profits early based on emotion and you didn't follow the plan, even though you took profits, that's not necessarily a good trade because you didn't stick to your plan. So we planned out the trade. Now we want to trade that plan. There's nothing worse than watching something do exactly what you thought it would do, but not participating in that. So as long as your trade isn't open the trade and cross your fingers hoping it happens, trade your plan. So tip number 3 is to cut your losers quick and let your winners run. Now, new traders, for some reason, always seem to do the exact opposite of this. Have you ever been in a losing trade and you didn't want to cut it, and then it got worse? Maybe you even averaged down so you could try to get out sooner, and then it gets even worse, and then finally you need to cut it for a big loss? Don't do that. Cut those losing trades quick. Now, the opposite, when you have a winning trade, let it run. Have you ever been down, 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 down? Then finally you get a green position and you cut it for 5 or 10% profit just because you wanted to see green? That doesn't work either. It's simply a math formula, and that one doesn't work. You need to let the winners run and cut those losers quick. I've got some numbers here. Let me check these for you. So let's say you have $1,000 starting balance and you take a 25% loss on a trade. Their next trade has to be a 33% gain to get back to even. So if you take a 25% loss to get back to even, you need a 33% gain from that point. So if you let these losing trades get out of control, it's really hard to recover. Take a $1,000 account size, for example, and let's say you take a 50% loss. So you're now down to $500. To get back to your original starting amount, you need a 100% gain. You can't do this. So you've got to cut those losing trades quick. The hardest part about trading is psychology. And this is a tough one for a lot of new traders to master. Unfortunately, if you don't get this down, you're not going to be trading long. When you have those losing trades, you've got to cut them. Know where it's going to hurt you, know your support and resistance levels, know your reason for cutting, and cut those trades. You've got to get that down. Now, on the flip side, when you have those winning trades, don't cut them the first time you see green. Let them run. Have an idea of price action and what the trade is doing. Watch it carefully. Let it do its thing. When it's time to get out and protect those profits, but don't cut those profits just because you're excited to see a little bit of green. Let those winners run. That way you can have more losing trades than winning trades and still be profitable. It's just a risk-reward math problem. If you let the winners run and cut the losers quick, you'll do a great job making a great income as a trader. This is the hardest lesson to learn, but trust me, it's one that you have to get down. Okay, so tip number 4 is don't trade on emotion. Now this one has two meanings for me. The first one is emotion about a trade. Have you ever been in a trade, it started going against you and you start throwing things around? Not good. You've got to manage those emotions. A trade is either going to make money or lose money. That's it. It's just a statistical problem. So what you want to do is get to the point where if you're in a losing trade, you just cut it quick like we spoke about earlier. And that's all it is. It's just a losing trade. You cut it and you move on. On the flip side of that, if you make a great trade, you don't want to jump up and down and start screaming and feeling like you're invincible. So you want trading to be mechanical. It's supposed to be boring. If you're in a bad trade, you cut it. If you're in a good trade, you find a way to maximize those profits, then you just move on to the next trade. This is a lot easier said than done. However, you want to get to the point where trading is so mechanical that there's just no emotion involved. Now, the other way this is effective, to me, is that I've got to watch my emotions when I wake up in the morning. So if I wake up and I'm in a bad mood, or if I'm exceptionally tired and can't focus, that might be a day where I want to stop trading or just lighten up the load a little bit. Maybe I take smaller positions, because we need to be focused on the charts. We need to be focused on what's happening in the market, and we need to be quick enough to react to what we see. So if you've got something on your mind, or if you're concerned about a loved one going through a situation and you're watching the charts but you can't really focus on it, that's probably a day where you should step away from the charts and not try to trade. When your emotions aren't there to focus on the charts, the distraction is such that it's going to cost you money. It's okay to not trade for a day or two. If you're not into it, or if you just can't focus for whatever reason, that's okay. Stay away from the charts, come back to trade another day. It's better to stop trading for a day than to lose money and have to dig yourself out of a hole. So don't get emotional about trades, whether they're good or bad for you. And if your personal emotions aren't quite there where you can focus on the charts, just take the day off. It's much better than losing money. Okay, so tip number 5 is probably one of the most important tips in this whole series. That is, remove the profit and loss from your screen. I've got to give a special shout out to Maria for sharing this one with me and with countless other traders. This has helped my trading tremendously. Now, we're all trading to make money, of course, but we don't want to sit there and focus on how much we're making or losing at any given point. Take the profit and loss off your screen so you can't even focus on it. Now, what we want to do here is trade the chart. If the chart's telling you to stay in a trade, you want to stay in the trade. If the chart's telling you to get out of a trade, you want to get out of a trade. So let's say your profit target for the day is $100. And this is one reason why we don't recommend having profit targets. So let's say your profit target is $100 and you're at $94. You're probably telling yourself, I only need $6 more to make my target. I'm almost there. But what if the chart's telling you to sell at that point? And instead of locking in a $94 gain because you're $6 away from your target, the chart turns against you, and now your $94 gain turns into 80, then 70, then 60. And you start telling yourself, oh man, I should have sold for 94, but I wasn't quite there yet. So if you're staring at the profit and loss, you're not trading the charts. You're trading an arbitrary number. The market doesn't care that you want $100 or $5,000. That's a random number that only means something to you. The market doesn't care. So when you have these profit targets, sometimes it forces you to stay in a trade because you're not quite there yet, and that's just not the proper way to trade. You want to get rid of the profit and loss on your screen, focus on the chart, If the chart says stay in the trade, stay in the trade. If the chart says to get out, you get out regardless of what the profit and loss actually is at that moment. When the chart says to get out, you get out. If you have the right entries and exits for your trading, the profits will be there. If it's a losing trade, you're going to minimize those losses. If it's a winning trade, you're going to maximize those profits. Trade the chart. Let the chart tell you when to get in and out, not an arbitrary number that means something only to you. Trade the chart because that's what the market is focused on. No one knows or cares that you want to make $250 today. But if the chart says to enter or exit, that's what's going to bring you the profits in the long term. That's tip number 5. Take the profit and loss off your screen. So those are tips 1 through 5 out of 22 that I'm going to be bringing you. I don't want this to be a super long video, so I am going to break it up into segments. That's the end of the first segment. Remember, click that link in the description below for your free copy of all 22 tips, and I will come back to you next week with a few more.